Hello everyone, welcome to the 93rd episode of me learning how to trade in Forex. So in the last episode we went through the global role of the US dollar, basically looking at its historical foundation, why the dollar remains popular in the post-Bretton Woods era, the US dollar as a reserve currency, commodities pricing and the US dollar, the dollar's impact on the global trade and finance, how the US benefits from the dollar's global role, and the future of the US dollar's dominance. And now we're on to basically like a history of what the US dollar is, like a background information. And now we're on to what is the US dollar index, or USDX. What is the US dollar index, also known as USDX? Date is the 2nd of April 2024. And yeah, let's get started. If you've traded stocks, you're probably familiar with all the indices available, such as the Dow Jones Industrial Average, Nasdaq Composite Index, Russell 2000, S&P 500, Wilshire 5000, and the Nimbus 2001. Oh wait, that last one is actually Harry Potter's broomstick. Very nice. Well, if US stocks have an index, the US dollar can't be outdone. For currency traders, we have the US dollar index, or USDX, and to be technically correct, the ICE US dollar index. The US dollar index consists of a geometric weighted average of the basket of foreign currencies against the dollar. Say what? Okay, before you fall asleep after that super geeky definition, let's break it down. It's very similar to how the stock indices work in that it provides the general indication of the value of a basket of securities. Of course, the securities we're talking about here are other major world currencies. Right, so the US dollar index consists of a geometric weighted average of a basket of foreign currencies against the dollar. So the US dollar index currency basket. The US dollar index consists of 6 foreign currencies. They are Euro, Japanese yen, British pound, Canadian dollar, Swedish krona, and Swiss franc. US dollar index consists of 6 currencies. 6 foreign currencies. Euro, Japanese yen, British pound, Canadian dollar, Swedish krona, Swiss franc. Why is that not capitalized? There we go. Here's a trick question. If the index is made up of 6 currencies, how many countries are included? If you answer 6, you're wrong. If you answer 24, you're a genius. The euro is the official currency of 19 of the 27 member states of the European Union. And the other 5 currencies, Japan, Great Britain, Canada, Sweden and Switzerland, and their accompanying currencies. And you get 24. It's obvious that 24 countries make up a small portion of the world, but many other currencies follow the US dollar index very closely. This makes the USDX a pretty good tool for measuring the US dollar's global strength. USDX is a good tool to measure the US dollar's global strength. USDX can be traded as a futures contract on the Intercontinental Exchange. USDX can be traded as a futures contract on the intercontinental exchange. It is also available in exchange traded funds, contracts for differences, and options. Also available in exchange traded funds, contract for differences, and options. ICE US Dollar Index. From a legal perspective, the designations US Dollars Index, Dollar Index, and USDX are trademarks and services marks of ICE Futures US Inc. The US Dollar Index is the exclusive property of ICE, also known as Intercontinental Exchange Group. USDX is the exclusive property of Intercontinental Exchange. Intercontinental Exchange Group is a global exchange clearing financial data and technology company operating multiple markets and services across 9 different asset classes. Right, okay, so Intercontinental Exchange Group is a global exchange clearing financial data and technology company operating multiple markets and services across 9 different asset classes. ICE operates 13 regulated exchanges, including ICE futures and OTC exchanges in the US, Canada, Europe, and Singapore. It also is a parent company of the well-known New York Stock Exchange. Right, okay. Continental Exchange Group operates 13 regulated exchanges. Also the parent company of New York Stock Exchange. Today the company is among the largest exchange groups in the world. So if you see ICE US Dollar Index, now you know why. It's privately owned and trademarks. Since the inception of futures trading on the US Dollar Index in 1985, ICE compiles, maintains, determines and weighs the components of the US Dollar Index. The Continental Exchange Group compiles, maintains, determines and weighs the components of the US Dollar Index. The US Dollar Index can be traded as a futures contract for 21 hours a day on the ICE platform. The US Dollars Index futures contract derives its liquidity directly from the spot currency market, estimated to have a turnover of over 2 trillion daily. Whoa, the US Dollar Index can be traded as a future contract. Futures contract based on the US dollar index were listed on November 20th, 1985. Options on the futures contract began trading on September 3rd, 1986. US dollar index futures and options on futures are available exclusively on the ICE electronic trading platform. The ICE US dollar index futures contract is the only publicly available regulated market for the US dollar index trading, allowing virtually round-the-clock access to futures traders around the world. Right, okay, so let me just... US DX can be traded as a futures contract for 21 hours a day on the ICE platform. The ICE US dollar index futures contract is the only publicly available regulated market for US dollar index trading, allowing virtually round-the-clock access to futures traders around the world. This is why the ICE US dollar index futures contract is considered the leading benchmark for the international value of the US dollar and the world's most widely recognized traded currency index. As the only publicly available regulated market for the US dollar index trading. This is why it's considered the leading benchmark for the international value of the US dollar. USDX futures contract is considered the leading benchmark for the international value of the US dollar. USDX versus DX versus DXY. If you've googled US dollar index, you might have seen three acronyms associated with the phrase USDX, DX, and DXY are one, and DXI, and wondered DXY, and wondered what the heck is the difference between them. What is USDX? USDX is the umbrella term for the US dollar index. You can't go wrong using this term if you're talking about the original dollar index. What is DX? The ICE exchange symbol for the futures contract is DX, followed by the month and year codes. The ICE exchange symbol for the value of the underlying dollar index, sometimes called the cash or spot index, is also DX without a month or year code, although different data providers may use different symbols. What is DXY? DXY is a popular ticker or symbol used by the Bloomberg terminal users so that the index is sometimes referred to as the Dixie. DXY is more commonly used when referring to the dollar cash or spot rate, while DX is geared more for futures traders. Although as mentioned, DX can also refer to the spot rate as well. Confusing, right? Yeah. US dollar index components. Now that we know what the basket of currencies is composed of, let's go back to that geometric weighted average part. Because not every country is the same size, it's only fair that each is given appropriate weights when calculating the US dollar index. Check out the current weights. So Euro's got the biggest weight of 57.6%, JPY 13.6, GBP 11.9, CAD 9.1, SEK 4.2, CHF 3.6. With its 19 countries, euros make up the big chunk of the US dollar index. The next highest is the Japanese yen, which will make sense since Japan is one of the biggest economies in the world. The other four makes up less than 30% of the USDX. Here's a question. When the euro falls, which way does the US dollar index move? The euro makes up such a huge portion of the US dollar index, we might as well call this index the anti-euro index. Let's go back to this, put that here. Like that. So geometric, it's only fair that each country is given appropriate weights. Because not every country is the same size. Within the 19 countries, euros make up a big chunk of the US dollar index. We read this part. The euro makes up such a huge portion of the US dollar index, we might as well call this index the anti-euro index. Fun fact, before the creation of the euro, the original USDX contained 10 currencies. The ones that are currently included except the euro, plus the West German mark, the French franc, the Italian lira, the Dutch guilder, and the Belgian franc. The euro replaced the last 5 of these currencies. Right, okay, before the creation of the euro, it contained 10 currencies. Because the USDX is so heavily influenced by the euro, traders have looked for a more balanced dollar index. We'll cover 2 other US dollar indexes later, Traded Weight Dollar Index, Bloomberg Dollar Spot Index. As a currency trader, you should be familiar with all 3 of them. Wait, so when the euro falls, which rate does the US dollar index move? It would move up, right? Because if the euro falls, then US dollar strengthens against the euro as it falls. So the index should move up, right? Is the ICE US dollar index adjusted or rebalanced? There are no regularly scheduled adjustments or rebalancing of the ICE US dollar index. Wait, later, alright, we're going to cover it later. Right, okay. There are no regular rescheduled adjustments or rebalancings of the US dollar index. The index was adjusted once when the euro was introduced as a common currency for the European Union bloc of countries. ICE, specifically ICE Futures US, monitors the index methodology to ensure that it properly reflects the covered currencies and the FX market in general, and makes adjustments as and when necessary, which is like never. Right, okay. So, no, there are no regularly scheduled adjustments or rebalancings of the USDX. How is a US dollar index calculated? What even is a rebalancing of the index? The ICE US dollar index is calculated in real time approximately every 15 seconds. This real time calculation is redistributed to all data vendors. The prices of the DX futures contracts are set by the market and reflect interest rate differentials between the respective currencies and the US dollar. Right, okay, so the USDX is calculated in real time approximately every 15 seconds. The prices of the DX futures contracts are set by the market and reflect interest rate differentials between the respective currencies and the US dollar. Between the respective currencies and reflects the interest differentials between the respective currencies and the US dollar. Where can I get real-time prices for the ICE dollar index? The real-time prices of the underlying cash US dollar index and for futures contracts based on the US dollar index are available from the market data vendors and on WebICE, an internet-based subscription service that provides real-time access to trading activity on the ICE trading platform. Subscription service, right? So you got to pay for it, basically. Since ICE controls the price data and they charge a fee, for the data feed, access to real-time feed does not come free. Wait, let me just read that again. Basically, since ICE controls the price data and they charge a fee for that data feed, access to a real-time feed does not come free. Delayed prices for the cash US dollar index can be found on websites such as Bloomberg, MarketWatch, CNBC, WSJ, and Yahoo Finance. Delayed prices for the ICE US dollar index futures are available on the ICE website. So these are the delayed prices. If you want to get up-to-date ones, you got to pay for them. Or real-time access, yep. Contract June the 20th. Okay. Yeah. Okay, next one. How to read the US dollar index. Read the US dollar index. Just like any currency pair, the US dollar index even has its own chart. Holler at the US dollar index. Yep. First, notice that the index is calculated 24 hours a day, 5 days a week. Also, the US dollar index measures the dollar's general value relative to a base of 100. Huh? Relative to a base of 100? Where does it say 100? How do you know it's 100? Anyways. The USDX is calculated 24 hours a day, 5 days a week. The USDX measures the dollar's general value relative to a base of 100. Okay, for example, the current reading says 86.212, which it does not. Okay, this means that the dollar has fallen 13.79% since the start of index. 86.212 minus 100. If the reading was 120.650, it means the dollar's value has risen 20.65% since the start of index. 120.650 minus 100. So it's whatever value minus 100. E.g., if the current reading is 86, let's just rank a random number. This means the dollar has fallen. Was it 14%? Because it's 100 minus 40. Oh no, it's 14 minus 100. No, it's 86 minus 100. 86 minus 100 since the start of the index. If the current reading is 120, this means the dollar has risen 20% because it's 120 minus 100 since the start of the index. Wait, start of the index? When is the start of the index? The start of the US, okay, here we go. The start of the US dollar index is March 1973. The start of the US DX is March 1973. This is when the world's biggest nations met in Washington, D.C., and all agreed to allow their currencies to float freely against each other. The start of the index is also known as a base period. Also known as the base period. The US dollar index formula. This is strictly for the grown and the geeky. Here's the formula for calculating the USDX. USDX equals 50 times 1434. So that's probably the percentage weight, or the weight of it, times Euro USD minus 0.576. 576, so that's 57.6. No, never mind. I don't know where they got this 50 point whatever this from. Minus 0.576, that's the percentage of the euro. USD JPY 0.136, so 13.6%. GBP USD minus 119, 11.9%. USD CAD 0.91, so 9.1%, 9.10%. USD SEK 0.042, so 4.2%. USD CHF 0.036, so that's 3.6%. Okay, that makes sense. But why is it why is it Euro USD, but then this one is USD JPY? Why can't this one be USD Euro? And why is GBP also in the front and not behind the USD? And also, these are the negative numbers if USD goes behind. So if USD is behind them, it's negative. USD is in front of them, it's positive. So I don't know. Got that good. Now you can get a wedgie from the school bully. We're kidding. Okay. Okay, so how to use the USDX for Forex trading. I bet you're wondering, how do I use this USDX in my Forex trading arsenal? Well, hold your trigger finger and you'll soon find out. We all know that the most of the widely traded currency pairs include the US dollar. Yep. If you don't know, some that include the US dollars are Euro USD, GBP USD, USD CHF, USD JPY, and USD CAD. What does that mean? What does this mean? If you traded any of these pairs, the USDX can be the next best thing to sliced bread or hamburger on a bun, or chocolate ice cream. If you don't, the USDX will still give you an idea of the relative strength of the US dollar around the world. In fact, when the market outlook for the US dollar is unclear, more often times than not, the USDX provides a better picture. In the wide world of Forex, the USDX can be used as an indicator of the US dollar's strength. So the USDX can be used as an indicator of the US dollar's strength. Because the USDX is comprised of more than 50% of the Eurozone, Euro USD is quite inversely related. Check it out. So this is the USDX daily chart. The price or the indicators going up. Next, take a look at the chart of Euro USD. So inversely related. So if that one's going up, then this one must be going down. Okay. USDX and EUR USD inversely related. It's like a mirror image. If one goes up, the other most likely goes down. When you look at that, it seems like the trend lines almost inversely match up perfectly. This could be a big help to those big on trading Euro USD. Some of our Forex trading friends in the forums monitor the USDX as an indicator for Euro USD. Hang out with them if you want to learn more about using this indicator. If the USDX makes significant movements, you can almost surely expect currency traders to react to the movement accordingly. Both the USDX and Forex traders react to each other. Breakouts in spot USD pairs will almost certainly move the USDX in similar breakout fashion. Both the USDX and Forex traders react to each other. Breakouts in the spot USD pairs will almost certainly move the USDX in a similar breakout fashion. To sum it all up, Forex traders use USDX as a key indicator for the direction of the USD. Always keep in mind the position of the USD in the pair you're trading. For example, if the USDX is strengthening and rising, if you're trading Euro USD, a strong USD will show an up-down trend of the Euro USD charts. If you're trading a pair in which the USD is a based currency, such as USD CHF, a rise in the USDX will most likely show a rise in the USD CHF charts like the one shown below. Right, okay, so a rise in the USDX, right, let me just write this down then. So a rise in the USDX will likely result in a fall of a currency pair with, wait, let me just, what do they call it? Base quotes. So the base with base USD. A rise in the USDX will likely result in a fall of a currency pair with a base AUD. A rise in the USDX will likely result in a rise of a currency pair with USD quote. i.e. EUR USD, i.e. USD CHF, USD CHF. So a good picture example would then be to take this like that, and then if I just do Control C, Control V, and then do that. Here are two little tips you should always remember. If USD is a base currency, then the USDX and the currency pair should move in the same direction. If the USD is a quote currency, then the USDX and the currency pair should move in the opposite direction. Ooh. Okay, let me just replace that with XXX to make it simpler. There we go. Just write that down actually. If USD is the base currency, USD XXX, then the USDX and the currency pair should move in the same direction. If the USD is the quote currency XXX/USD, then the USDX and the currency pair should move in the opposite direction. Yep. Total weighted dollar index. Total weighted dollar index. There is also another kind of the US dollar index. It was created by the Federal Reserve and now is used widely by lots of sexy people like economists and currency analysts. This is called the trade weighted US dollar index. So trade weighted dollar index was created by the Federal Reserve. You can find it on the Federal Reserve Economic Data website here. The website is probably one of the most beautiful websites ever made. The website is probably one of the most beautiful websites ever made. Just kidding, it's a government website, okay. Federal Research, Economic Research, Federal Reserve Bank of St. Louis. Beautiful, like lipstick on a pig. Useful? Hell yeah. The trade weighted US dollar index, also known as a broad index, also known as the broad index, is a measure of the value of the US dollar relative to the other foreign currencies. The broad index is a measure of the value of the US dollar against or relative to other foreign currencies. It is a trade-weighted index that tries to improve on the older and privately owned ICE US dollar index by using more currencies and updating the weights yearly. The Fed wanted to create an index that could more accurately reflect on the dollar's value against foreign currencies based on how competitive US goods are compared to goods from other countries. It was formed in 1998 in order to keep up to date with the US trade. The trade-weighted US dollar index. The Federal Reserve Bank of St. Louis provides a weighted averages of the foreign exchange values of the US dollar against the currencies of a broader group of major US trading partners. From strongest to weakest, here is the current weighting percentage of the index. The trade-weighted dollar. Oh, that's why it's called a trade, because trading partners. Right, okay. Weighted dollar index provides a weighted averages, provides weighted averages of the foreign exchange value of the US dollar against the currencies of a broad group of major US trading partners. From strongest to weakest, here is the current weighting percentage of the index. Country, Eurozone, so that's euros, basically Europe, 18.947, China 15.835, Canada 13.384, Mexico 13.524, Japan 6.272, United Kingdom 5.306, Korea 3.322, Taiwan 1.95, Singapore 1.848, Brazil 1.979, Malaysia 1.246, Hong Kong 1.41, India 2.874, Switzerland 2.554, Thailand 1.096, Australia 1.395, Russia 0.526, Israel 1.053, Sweden 0.52, Indonesia 0.675, Saudi Arabia 0.499, Chile 0.625, Philippines 0.687, Colombia 0.604, Argentina 0.507, total 100%. Weights as of December 16th, 2019. So it's about 5 years or 4 years out of date, pretty much. The main difference between the USDX and the traded weight US dollar index is the basket of currencies used and relative weights. So, difference between the USDX and the total and the trade weighted dollar index is the basket of currencies used and their relative weight. Because you can see that the Eurozone stuff is 18.947, whereas back in the USDX that's about like what, 50% or something, wasn't it? 57.6%. So yeah, it's a lot. This indicator is now a lot less affected by whatever the euro is, basically. So euros has a less of an impact on the indicator now. The trade weighted index includes countries from all over the world, including some developing countries. Given how global trade is developing, this index is probably a better reflection of the US dollar's values across the globe. The weights are based on annual trade data. The weights are based on annual trade, not annual trade data. Weights for the broad index can be found at Federal Reserve releases weights. If you would like to see historical data, check out Federal Reserve releases H10 summary. Cool. Okay. I'm going to leave this episode here. In the next video we're going to cover the Bloomberg Dollar Spot Index. So yeah, thank you all for watching this video, and I will see you in the next one. So yeah, peace.